Hi, this is Matthew Cratter from Trader University, and today I want to talk about another day trading strategy that is very similar to the day trading strategy we talked about in the last video. Now this one is actually going to be about how to short stocks. So let me show you first of all how we screen for them. We'll go to StockTwits, stocktwits.com. You can open up a free account there. And if you see at the top, there are these trending tickers. And so what I did this morning is before the market opened, I looked to see which ones were big movers down. So for example, this one, SNCR, I noticed was trading down in the aftermarket hours yesterday afternoon and again this morning before the market opened. So what you can do is you can just Google it and find out what the news is. Syncross Technologies, the CEO and the CFO left, which is usually not a good sign that for the future of the company. And they also issued a revenue warning. So once you have bad news for a stock like this and it's trading down, the most important thing is to see how it trades in the first 15 minutes of its trading the following day. So this news came out when the market was still closed, and then the adjustment really happened today. Now you can see SNCR has been trading in the 25s and the 24s, 25s for the last 20, 30 days. It's a little hard to see on the top here. This is basically a 15-minute bar chart. So each of these bars is 15 minutes. And you can see this giant gap down. So let's scroll in a little bit to see what's been happening today and how we might trade something like this. What you're looking for is a stock that's gapping down on bad news and is gapping below the last 15, 20 days of trading. So in other words, this is a stock that was used to trading in the 24s, 25s. Now it's in trading in complete no man's land, and no one knows what to do because this news was so bad. So the way this particular strategy works is we wait for the first candlestick to form, and this is a 15-minute candlestick. So here on the West Coast, it will be completely formed by 6:45. The market opened at 6:30 this morning. The first 15-minute candlestick bar will be formed at 6:45. And what we do is we want to enter an order to go short at the closing price of this candlestick bar. So we can see it closed at 13.88. So we're going to enter a sell short order. You're going to want to sell short if you can get the bar from your broker. And what will happen, you'll enter that order right at 6:45. Now as a stop loss, you want to use the high of this first 15-minute candlestick. And that high today was 14.95. So you can put a stop at 14.95.15. If it trades up there, it really shouldn't be. So you can see the next bar we would have been filled because the high on this was, let's see, if we went short at 13.88, this bar went up as high as 14. So we're definitely filled around 13.88, maybe even a little bit higher, which is good because we're going short. And basically, just to remind you, when you're shorting a stock, you want to sell high and buy low. It's the exact opposite of being long a stock where you want to buy low and sell high. And if you have more questions about shorting, please feel free to drop it in the notes below, in the comments below, and I'll get back to you. So basically, we went short this morning, 13.88. And you can see the stock's been selling off for most of the day. Now, there are different ways you can do this. You can take your take profits midday after the stock's gone down a fair amount. Or the other thing you can do is just hold this until the market closes. Or what you can do is you can use sort of a trailing stop. So the way you might want to do that is, let's say we go short here at 13.88. We'll use the high of this bar as our new stop then. And then we'll use the high of this bar as our new stop. The high of this bar is 13.42. Maybe we'll use the high of this bar then as our new stop, 13.10. 13.10 becomes the new stop, the new stop loss. And basically, you just swing it on the way down. The other thing you can do is if you get a really sharp sell-off in the middle of the day, you can also take profits then, which is definitely a good problem to have. Or you can just hold it till the market closes. And in many cases, if you're going to do this a lot, you're better off holding until the market closes. And this may rally back up by the end of the day. We don't know. But where you'll really make your money is when the stock just keeps selling off the entire day and closes at the lows of the day. And if you cover then overall over a number of trades, you should make more money that way. It really depends on how you like to do it. On the other hand, maybe you just want to, make your quick money, make a quick buck. on 1,000 shares, that's $1,000. You make it in the first hour or so. Head off to the beach. Really depends on what you're used to. If you like this idea, check out my book on Amazon, The Little Black Book of Stock Market Secrets, where I talk about lots of different stock trading strategies. And there's a link to that on your screen and also in the description notes below if you're on mobile. And also be sure to subscribe to my YouTube channel so you don't miss out on future videos like this. I plan on doing a lot of videos going forward on day trading and swing trading.